From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming April 17th Forex session. In front of you is the Euro-US dollar pair, and I will go ahead and put a 200-day moving average on this chart just to define the trend for the longer-term trend traders. And as you can see, we have risen here lately and have bounced off this dynamic resistance area a few times. Monday saw the pair attempt a breakdown of the 130 level, which has been obvious strong support, as I have marked that as a thicker line. You can see that there's an area that the pair has quite frankly refused to fall below. Having said that, it does look weak overall, and there are even some calls out there for a complex head and shoulders being formed. Of course, having said that, we did get the pop during the session on Monday, but as you can see, we gave up a little bit of those gains towards the end of the session, and it should be said that the U.S. stock markets, which had a lot to do with this move, also gave back a little under half of their gains by the end of the session from the highs. So having said that, it's a little bit of a paper tiger, so to speak, as there may not be any real juice behind this move. The 132.50 level, of course, has been an area that prices reacted to several times, and as such, I have a hard time believing that we're going to go much higher than that. Plus, we have Spanish bond auctions out there to worry about later this week. With all this being said, I prefer to be short of this pair, especially as the trend is down. And as a result, there are a couple different trades that we can take. Myself, I will be selling any daily close sub 130, as I would assume that that is a massive breakdown. And of course, I would sell rallies that showed any signs of wearing out, like perhaps if we get a shooting star or something like that. Either way, I am not buying this pair until we get above 135, just simply because there are far too many concerns in Europe. The markets are well versed in debt problems right now, but quite frankly, it just seems like the odds are stacked that the next headline shock that we get will be euro negative. And as a result, you can see that every time we've gotten a headline, we've shot straight back down to 130. Again, that is key. Once 130 gives, we could fall much further. So looking out on the longer term, that is exactly what I want to see.